Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Masco Corporation Annual Report. Masco Corporation offers a wide range of products and services for home improvement and building needs. The company's plumbing products segment provides various plumbing components, including faucets, showerheads, valves, and sinks, under several brands such as Delta, BRIZO, and HANSGROHE. This segment also offers acrylic tubs, spas, exercise pools, and aquatic fitness systems. In addition to plumbing products, Masco's decorative architectural products segment offers paints, primers, specialty coatings, stains, and waterproofing products under the BEHR and KILZ brands. The company also provides decorative bath hardware, shower accessories, mirrors, and shower doors under various brands such as Brainerd and Franklin Brass. Masco's products are sold to a variety of customers, including home center and online retailers, mass merchandisers, wholesalers and distributors, plumbers, building contractors, remodelers, smaller retailers, consumers, and home builders. The company's extensive product line and global reach make it a leading provider in the home improvement and building industry. The list of businesses and services provided by Masco Corporation includes plumbing products, faucets, showerheads, valves, sinks, acrylic tubs, spas, exercise pools, and aquatic fitness systems, decorative architectural products, paints, primers, specialty coatings, stains, waterproofing products, cabinet hardware, door hardware, wall plates, hook and rail, outdoor living hardware, decorative bath hardware, shower accessories, mirrors, and shower doors brands. Delta, BRIZO, Peerless, HANSGROHE, AXOR, KRAUS, Easy Drain, Newport Brass, Ginger, BRISSTCH, WLTC, BRISTN, Heritage, MIROL, Hot Spring, Caldera, FREFLOWSBAS, Fantasy SBAS, AQETRRA, LIFESMRT, Endless POOLS, TYLO, FINNLEO. Hello and Master Plumber private label products for home center and online retailers, mass merchandisers, wholesalers and distributors, plumbers, building contractors, remodelers, smaller retailers, consumers, and home builders. Unfortunately, I am unable to provide a response as I do not have access to the text you provided. Please provide the extracted summary so that I can assist you with generating an overview essay on what has caused Masco Corp's stock price to make no significant changes in the past year. Masco Corporation market capitalization of $16 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that Masco Corporation holds a significant advantage in their industry. Masco Corporation trades at a higher price-to-earnings ratio of 20 times and a lower price-to-book ratio of -85.89 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that investors are already valuing the industry with a forward premium for the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 101% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company revenue have been declining annually even though operating income have been improving. Although the drop in revenue is concerning, we can tell that management have been able to reduce cost. The primary drivers of revenue growth and decline can be identified through a thorough analysis of various factors. On the growth side, residential repair and remodel activity, new home construction, and strong brand reputation are key contributors to revenue expansion. Product innovation, high-quality products, customer service, and breadth of product offering also play significant roles in driving revenue upwards. In addition, successful execution of acquisition strategy, ability to pass cost increases to customers, and cost savings from integration of acquired businesses have contributed to revenue growth. Furthermore, North America and international revenue growth have been notable drivers of expansion. On the other hand, price competition from low-cost foreign manufacturers, competition from private label products and digitally native brands, and seasonality have led to revenue decline. Lower sales volume, divestitures, loss of exclusivity agreements with major customers, and decrease in estimated fair value of reporting units and other indefinite-lived intangible assets have also contributed to a decline in revenue. It is worth noting that some factors have had neutral or no clear indication on revenue growth or decline. These include fluctuations in raw material prices due to commodity hedges, disruptions in supply chain logistics, changes in trade policies and laws, loss of critical suppliers, and confirmed obligations outstanding under the supplier finance program. The net income of the company experienced a decline over the past 3 years. In 2023, it stood at $908 million, which decreased by 9.6% to $822 million in 2024. Although there was a slight decrease from $822 million in 2024 to $810 million in 2025, the overall trend indicates a downward trajectory. The profit margins of the company also underwent changes during this period. The operating profit margin as reported decreased by 90 basis points from 16.8% to 16.5%. Additionally, the gross profit margin declined by 1.1% from 36.3% to 35.2%. Several factors contributed to these changes in net income and profit margins. A decrease in sales volume across the entire company was partially offset by higher net selling prices of plumbing products. However, increased costs due to raw materials, duties, tariffs, and inflation were not fully passed on to customers, resulting in lower profits. Furthermore, a non-cash impairment charge related to a registered trademark in the decorative architectural products segment also negatively impacted the company's financial performance. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the provided summaries, this trend has been observed across multiple years, with page 26 confirming that the company is indeed generating positive operating cash flow. Furthermore, page 37 provides concrete evidence in the form of net cash from operating activities figures for 2025, 2024, and 2023, solidifying the notion that the company's operating cash flow remains positive. This suggests a stable financial foundation for the company. The company's performance can be analyzed through its regional and segmental sales. In terms of regions, Europe stood out as a strong performer, accounting for 21% of the company's total sales. This indicates that the European market was a significant contributor to the company's revenue. On the other hand, the decorative architectural products segment struggled due to a non-cash impairment charge related to a registered trademark. This charge resulted in a $5 million loss, which negatively impacted the segment's overall performance. Management's outlook on company strategy. The management of the company has outlined a clear strategy for continued growth and success. They plan to leverage opportunities across the enterprise while actively managing their portfolio to return value to shareholders through share repurchases and increased quarterly dividends. The company is focused on developing connected water products, expanding into new areas such as electron beam irradiation services and custom thermoplastic solutions, and maintaining a strong presence in North America and Europe. To achieve this growth, management has entered into long-term agreements with suppliers to reduce price volatility for raw materials and manage costs through multiple sources. They are also investing in brands, innovation, customer service, and disciplined capital allocation to drive growth. The company's success depends on providing quality products at acceptable prices with timely delivery and high customer service. Management is confident in the fundamentals of their business and long-term strategy, which includes a balanced growth strategy through organic growth and strategic acquisitions. They plan to increase the annual dividend by 3% to $1.28 per share in 2026 and maintain a positive outlook with long-term growth rates assumed to be 2% per annum. Overall, management's strategy is centered around driving growth while maintaining a strong financial position and returning value to shareholders. The company has made strategic moves to enhance its portfolio through acquisitions and divestitures. In terms of acquisitions, the company is actively pursuing businesses that are complementary to its existing portfolio, aiming for future growth. However, one notable acquisition resulted in a net loss of $4 million in 2024. On the other hand, the company has also made significant gains from divestitures. In 2024, it received proceeds of $126 million from the disposition of certain businesses, net of cash disposed. This move not only generated revenue, but also allowed the company to occasionally provide reasonable and customary indemnifications in conjunction with these transactions. The company has a history of rewarding its shareholders through various means. One way it has done this is by paying out dividends. According to the financial records, the company has indeed paid dividends in both 2024 and 2025, with amounts totaling $261 million and $254 million respectively. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. The records show that the company bought back shares worth $571 million in 2025 and a significantly higher amount of $751 million in 2024. This demonstrates the company's commitment to maximizing shareholder value through various means. Concerns about inventory buildup and supply chain disruption are growing. The data suggests that inventory days have increased from 72 to 83, indicating a potential buildup of stock. Furthermore, finished goods inventory has risen by $79 million, 14.6% increase, and total inventory has increased by $108 million, 11.5%, which could lead to inefficiencies in production and distribution. Supply chain disruptions are also a concern. Supplier disruptions due to changing laws, regulations, government policies, and force majeure events pose a significant risk. Raw material shortages and supply disruptions can further exacerbate the issue. Additionally, extreme weather events and changes in climate may disrupt operations and impact consumer spending. Higher commodity costs and tariff costs may also indicate supply chain disruptions, highlighting the need for companies to adapt and mitigate these risks. That concludes the financial summary for Masco Corporation. Feel free to comment below, and I will be happy to answer them when possible.